Good morning and welcome to today's edition of the London Session Open. Today is September 26, 2019, and you're most welcome to join me in the chat box. If you have any questions, you just want to say hello. We're going to begin. We're starting a little bit later today, and we started a little bit later yesterday as well. Reason for that is I'm trying to publish a few articles on InvestingCube before doing the webinars. We're going to be experimenting a bit with the timing. Might do it much more earlier, might do a bit more later, but probably not around 9:30 as we've been doing so far. We have some stuff happening here. Eurodollar is down quite a bit. ANO published an update earlier today on that. GBPUSD, which we talked about yesterday as well, head and shoulders, that's playing out really good now. And then there's some other things here like the DAX 30 trying to overcome its downtrend. So we're going to talk about all of that. I'm going to see as well if we can talk a bit about Bitcoin as well. And we'll begin, and we're going to begin with the pound, because I think that's probably the easiest. So the pound, as you know, I've been talking about selling up here for quite some time because of the longer term bearish trend, and I've been bullish on the way up here. And then we said we had a trend funding level here at 123.88, then we pushed it back down here, and I talked about the risks of this maybe rolling over. And what happened eventually is that the market did roll over. In fact, the dollar is doing quite good, and we traded below 124, which is also that inverse head and shoulders. You get yourself a head, left, and right shoulder, and that gives you a target of 122.41. And unless you shorted here already, then we're probably a bit too late. If you shorted here or here, actually here in the actual spot, then that would be too late. For now, the trend funding level is at 125.10, and it's just about monitoring that. And I think if we do bounce a bit to this low, then I think the market might try to sell. And right now you might feel, oh, I'm missing out. You know, don't get too carried away. The markets nowadays, they're very difficult. They will give you a good amount of pips. Like right now I'm up with about 100 pip on this move, but it can be gone in an instant. In fact, the German DAX is a very good example of that, and also the Nasdaq 100. So this is the German DAX, where we talked about selling here and here, and you know, on the 24th the market collapsed, and then on the 25th it just went straight back up again. There's several reasons for this. Positive comments from China's Ministry of Commerce. You also have President Trump, which is probably the most important thing. The Democrats are trying to impeach him, so they have about 6 committees doing investigations. They do the investigations, the inquiry, and then if the House votes for an impeachment, it goes to the Senate. The actual trial happens in the Senate. Now, what the White House said yesterday is that they released the transcript of that call, and people reading that think, oh, this is not a big deal. So that's why the market bounced a bit. So we're back up at these levels. Now, technically, this is still a downtrend, and the trend is bearish below 1,200, sorry, 12,401. As well, the economic data we had bad, you know, has been bad for quite some time. I mean, the data's coming out has been bad. There's no real reason to anticipate any major changes. I mean, even Mario Draghi himself, I think it was last week or so, said that, you know, he was bearish on the market, not bearish on the market, but bearish on the economy. ECB's Draghi thinks Euro area economy might slow further, and he talks about these leading economic indicators. And so I don't really foresee this market go substantially higher, but they are a bit weird, they're a bit crazy, a bit like the pound, you know, up quite nicely and now back up break even. This though gives also an opportunity to short sell if you wanted to. As for the S&P 500, it's unfortunately quite a lot back into the prior range. So this is more high risk. The German DAX is just sort of flirting with the lows, sort of as a tiny bit into the old range. This market is well in the old range, which is a bit of a risk. But the S&P for now does remain bearish below 3,007, And this is actually, the way this looks like now, is an even a bigger head and shoulders with a massive head, potentially the right shoulder, and now the left shoulder. I did do an update as well on the Nasdaq 100. If you want to find stuff, it's very easy. Up here, you can click on tags. So if you know what you're looking for, just click on the tags, and hopefully we'll do an update on that. If not, if you're just sort of looking for our trade ideas and you just want to see what's going on, then you just hit the home page. You got the Forex. If you click here, you'll find much more stuff. Bear in mind, we produce a lot of Forex content. We try to update all the commodities at least once a day. That will be gold and crude. Sometimes we do silver. And then we'll do the indices here as well, and some cryptocurrencies. If you want to just look for the chronological order of things as we publish, you go here, and then you just click on the buttons. So what about the euro then? So the euro a few days ago, yes, you know, the idea was to sell up here and then book profits here, alternatively here. The market now went up on the 4 hour. Sorry, I'm a bit confused here. There we go. What I done now, compared with yesterday, is that the trend finding level is up here somewhere. It's now been put here because you have a nice double top. You have that strong decline. And you know what, guys? It's not always the best time to enter the market. And right now, just above the September 2019 low is not a good idea. It is normally would have been a great idea to sort of say, oh, look, we're going to trade below a new major low. And I do think realistically we will trade lower, given the fact that the ECB is doing QE, interest rates are very low here. In fact, they're negative, so you actually have to pay to lend money to the German government. And the US, at least you get some support, and the economy there is much more healthier than here. So I do think we're going to go down, but this is not a spot to book profits. I think, and I'll show you my magic chart. It's not the chart that is magic, it's actually the actual pitchfork that is a bit magic. Now this pitchfork, what it tells you is that around the blue line, and the blue line is right now 101.10, the market has bounced. In fact, it bounced here, 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 and here. There's a 1, 2, 3, 4 bounces, and the same sort of the upper trend line has cap price. Now, just because we're here doesn't mean we should go out and buy a lot of euro dollar right now, because you were trading against the trend. Sometimes what happens is that the market establishes us below the blue trend line, and then it attacks the next level, which would be the green line at 107 or 08. I do have a long-term bearish outlook. In fact, in my quarterly market outlook, I talk about the likelihood here that the euro dollar can drift down to 108. I mean, and I think you can potentially go lower. So I do think that it looks like this, the report. So I do think we can go lower, but again, it's probably not the best time to short sell down here, especially as this has been dominating. And let me show you something else on the dollar index, the DXY. It is also explained by the same similar sort of Anders pitchfork. The quality here is not the same, as because you can see many times we slip below the lower line, but it tends to be capped. So it did a very good job projecting this level here. So what it tells you here again is that we might actually go a little bit higher, but we should really realistically turn around at these levels. And we need to remember, let me just add an RSI. RSI is actually not overbought, which is good if you're dollar bull. So, oh well. President Trump, he sees the dollar strong. What does he do? Tweets about it. He will try to talk down his own currency. I think the fact that it's choppy like this could be explained partially by him. There's he does not want to see a strong currency because he wants to boost exports, and to have decent chance of the exporting game is good if you have a relatively weak currency. Um, so that could explain sort of the choppiness. There's even talks. I've been on CNBC 2 times, and they asked me. Actually several times I've been, but then for the last 2 times I've been there, they asked me, "Will the Treasury intervene?" So there's talks about the Treasury intervening. Now it doesn't mean that the Treasury will indeed intervene, but the thing is this: when people start to talk about it, and then it suddenly becomes normal, then they could intervene, and that's interesting. Like as well in Japan, the government of Japan and the Central Bank of Japan have actively bought and sold their currencies. The Swiss National Bank, they actively work with their currency because they think it's too strong. So it wouldn't be bad necessarily for. It wouldn't necessarily be. I mean, I think it would be bad, but it would be not unsurprising if the U.S. government would push for the same. So again, I wouldn't get too excited about euro dollar at these levels. If anything, it's a little level to buy. And if you happen to be one of those guys that wants to trade against the trend, then it's time to potentially start to buy a bit. The only issue though is maybe the RSI is not extremely oversold. So we can probably go a bit lower, but I would not be selling. If you do want to trade then the euro, so I think that the safest thing here is again wait for a little bit of a bounce. So you would look at these lows here. This is an important low, and if we do swing up to 107 or 109.76, I think people might sell. Then they might push price down to 108.87, which is a target of, I think this, I treat this like a little rectangle head and shoulders pattern. This is the dollar versus the Japanese yen. Now I understand they're not going to impeach President Trump, but I don't really agree with stock markets trading where they are. I disagree with that strongly given the economic outlook. On the other hand, I do understand that the ECB is doing quantitative easing. Just about any major central bank is cutting interest rates. So that is supporting the markets. Because where are they going to go? Put your money in government bond yields in Germany where you get a negative yield? Of course not. So I think that is all influencing the markets in to boost stock markets. But I would assume that at one point people are going to start to look at the economic data. So I reckon that eventually this will go down lower, and I'm going to stick with the idea that the long-term trend is bearish below 108.49, and that this is the sell zone. But it's difficult. I don't disagree with that. Gold prices then. Gold prices, a big push to the downside on the news that Donald Trump, on the releasement of those transcripts. So we had this, and it is a very difficult situation. I have a friend of mine that trades silver, and he was telling me, he sent me a message via WhatsApp yesterday, and he said like, I was up with £1,000 that I accumulated over the last 2-3 days, and now I'm up with £200. And he was talking about how the whole year has been like this and how frustrating it is, and I don't disagree. The markets have been very, very difficult. This really, you get a few days of profit, and then in a second or so it's wiped out. It's a very headline driven market. President Trump says something, you're either in a big profit or a big loss. Some data comes out, people interpret it in one way or another. This will clear at one point, but right now, unfortunately, it is what it is. And what happened here is that I was bullish from lower levels. The market went up, and then we plummeted down. What I have done here now is that I have actually adjusted. So I bumped up the buy area a bit, and I think we can actually lower the turn of funding level a tiny bit like that. And I recommend that between 1,502 and 1483 people gonna buy. I also did highlight this little buy zone here yesterday. I hope though that you were clever enough not to buy on the first touch. The reason for that is that these buy zones are areas where I think the market can bounce, but then unfortunately there's no guarantee they will bounce. And when you have the luxury of knowing that some news has come out and that's causing everything to collapse, and you can just see how other markets are reacting, you don't have to buy at the first buy zone. Does that make sense? If, for example, something comes out now, something strongly, something comes out, and then gold just needs to plummet, and you see as well the dollar gaining against many other markets, then obviously we're not going to buy at the 1502. We let it go down, and then when it looks like the market's going to settle, that's when one can consider to buy. Crude prices, Brent crude. All right. Again, a bit the market's just being a bit difficult in general. It's quite interesting. You know, we had that massive move. I think it was about a 20% move. This chart here is underestimating. Let me actually see here. So Brent crude oil futures. Let's just work with the December one. This is the actual December contract in Brent crude futures. So the market closed here at 59.57, and then the market reached a high of up here. And this is the actual futures contract that the professionals use. So the market here moved up with 18%. So you can imagine people with leverage, you know, getting margin called here, and now the market is back at the entry. Obviously, the whole idea of avoiding getting a margin call is that you don't trade with so much leverage, and you try to be careful a bit with something like this. But again, it was literally you know, you have tensions in the Middle Eastern region. We had that for since I was a kid, even before that. So, but I think if one has the right money management, maybe would have lost quite a lot, but not necessarily lost all your account. Because now the market is back out down here, and the market will do like this. It will be messy and crazy. And as a trader and investor, if you trade too recklessly, which means you put all your account on just a few trades, you're not gonna be around when the times are good. Because all strategies, rainbow strategies, that had a terrific last year, and then you have trend following systems that had a relatively good 2017, 2018. So all strategies have their day. The same way as a broken watch, it's right about the time 2 times a day. But if you spend all your money in just a few trades, you're not going to have capital to trade when things move to your favor. So what you can see here, though, so bear that in mind. A little bit of a detour here. Just give me a second. If we go back here to the technicals, so the trend remains bearish below 64.79, and I reckon that if we go up to 63.09, some people might sell, but I will be very, very careful. I wouldn't engage here just because we don't know what's going to happen, and things could escalate, and I do think things will potentially escalate geopolitically, maybe military action against Iran. I think that's pretty much it. We covered everything. The only thing we did not cover, which I mentioned in the beginning, is Bitcoin. So let's talk about a bit about Bitcoin. So this is Bitcoin, and you have a massive descending triangle, and the trend was bullish above this level. This is actually some old analysis I did. So when we were trading down here in July, I said if we go down, people are probably going to buy and lift this up. So you had a nice move here, and then we went down again to the same levels. I don't remember doing an update, but I do know, yes, I must have done some update here, of course. But the July 17th low was the level. And then eventually, as you can see here, things are getting just more and more squeezed, right? So then this translated into a descending triangle to some extent. You could also call this just a simple triangle like that, which I guess is something that might even be a better interpretation. But if that's the case, then so this is the base and this is the breakout. So you still have, actually let's do it like this. You see this is a 29% decline, and a 29% decline from here takes you down here. That's more of a better assessment, I think. I take the percentages instead of the actual price change, because the difference here is $3,000, almost $4,000. And if we just move this around, you're gonna get some very exaggerated results. And in some situations, in some smaller coins, it even suggests that the price is gonna turn negative, which it can't do. It will just go into more fractals. So things are not looking that great, at least here right now. I think in the short term, you know, the RSI and everything is extremely oversold. You know, if you're really like a bull, I mean, I think we're gonna bounce a bit, I guess. That would not be unsurprising. But I think realistically it's gonna go up again, and it's gonna attack the downside. In Ethereum and places like this, you know, you're still dealing with a downtrend to some extent. This one actually even better because above its low. But you have other stuff like Ripple, you know, which took out this important level, then went back up and then go down. So it looks more pain ahead in cryptos, not necessarily today or tomorrow, but we can obviously have a bit of a bounce. But always when you take a position on, you always need to look at the risk reward ratio. Okay, Nikos, good morning. Thanks so much for joining us here in the chat box. If you guys want to know more about the quarterly market updates, there it is. If you are a member of Investing Cube, just sign in and you can check out the stuff, or just go directly to the same page and it's going to ask you to sign in, and then you check out the link. The purpose of the Q4 report is to give you explain the factors that are moving the markets so you can be prepared for what may happen. We also talk about different levels, so you do get more insight to how to tactically trade the markets as well. And we try to be slightly longer term, so we try to avoid the swings that could lift the price for 2-3 weeks. Rather, we try to determine what's going to happen in the next 3-4 months. Okay, I think we're going to wrap things up. Guys, thanks so much for watching. If you like it, don't forget to click here, and then you click on the like button. Okay, I think we're going to wrap things up. Guys, thanks so much for watching. If you like it, don't forget to click here, and then you click on the like button already. Okay, I think we're going to wrap things up. Guys, thanks so much for watching. If you like it, don't forget to click here, and then you click on the like button already. Okay, I think we're going to wrap things up. Guys, thanks so much for watching. If you like it, don't forget to click here, and then you click on the like button already. Okay, I think we're going to wrap things up. Guys, thanks so much for watching. If you like it, don't forget to click here, and then you click on the like button already. Okay, I think we're going to wrap things up. Guys, thanks so much for watching. If you like it, don't forget to click here, and then you click on the like button already. Okay, I think we're going to wrap things up. Guys, thanks so much for watching. Have a great day, and have a great day. See you guys tomorrow. Thank you, and bye-bye.